Hi, I'm Melinda with Landmark Title. The numbers in our housing market are forever changing, so it is important to stay up to date on these changes. With Market Insights, we bring you the stats, facts, and figures to keep you and your clients informed. Join us now.
Good morning, everybody. Scott Kiburz here with Market Insights for Landmark Title for September 2023. Let's begin. Today's agenda, we're going to be talking about monsoon season, some headlines at the national level, local level. We're going to look at some numbers in Maricopa County, and then we're going to drive into the ending with some individual city numbers. Next, please. So fast facts that everybody should just know about. So let's start on the right-hand side with active single-family homes, 6,659. Active townhome condos in the 580, 590 range. Manufactured home, a little higher, 527. Closed for the month of August, 4,879. Our absorption rate was 54%. Coming soon, holding in the mid 450 range, 480 range. Interest rates have certainly gone up with an average right now of about 7.2, but they're definitely in the range of 6.5 to 8.5%. Our average sale price in Maricopa County hit $55,093 for the month of August. Those are the fast facts of where we're at right now for Maricopa County. Next. Ladies and gentlemen, out of the gate, let's talk John Burns for just a quick minute. He released an article mid-August about winners and losers in the housing market, talking about demand. And I thought this was a brilliant way to start today. There's a concept out there right now that we're kind of in a holding pattern. So what John Burns is sharing with the group is this. On the right hand of the screen is, without the lines being there, that's kind of a map of the United States. And Phoenix is in the lower left in light green. What he's looking at for strong migration, what's happening right now in dark green, is Houston, Jacksonville, Charlotte, San Antonio, Fort Worth, and Nashville. They're experiencing the migration growth that we've had. Go back a couple years pre-pandemic and through the pandemic, we just had strong migration for 7-10 years. We seemed to be in the top 5, if not higher. We've fallen down a little bit. The mid-level of this group, previous strong migration, now trending less than it was a year ago, is Dallas, Atlanta, Tampa, Boise, Orlando, and Raleigh-Durham. Previously strong and now trending barely positive migration, Phoenix, Austin, Vegas. So that's putting us in a little bit of a migration. We're not having the same powerful growth that we did have in the previous 10 years. Wanted to put that in perspective for the group. Next, please. Some losers by demand. Previously, people are definitely moving out of areas of Sacramento, San Bernardino. I was surprised by this. Denver, Salt Lake, Philadelphia, Seattle. Very negative, and it continues to be that. Now, this I anticipated. The Bay Area, Orange County, San Diego, San Jose. Miami was surprising. DC, Boston, Chicago, San Francisco. Ladies and gentlemen, depending on where you are in our metro, and then if you're working with a buyer coming in or a seller going out, just look to where they're headed. Great national insight of what's the market of the moment nationally. Next, please. Some more headlines. Ladies and gentlemen, this is from the Greater Economic Council for Phoenix Greater Economic Council. And these are the top 6-7 headlines that are happening. What I wanted to point out is there's still a lot happening with the chip industry. We're ranked, obviously, top right is Phoenix is ranked as a sustainable metro. Chris Camacho has been appointed to the Arizona Mexican Commission, and Senator Kelly and Camacho visit Taiwan to deeper economic relationship. So just headlines in the last 90 days from the Greater Phoenix Economic Council. Good information to know. Next, please. In addition to that, this is the top 4 headlines coming from the Real Estate News, which is a Stefan Swanepoel piece. A little bit of everything on this slide for everybody. That mortgage rates level off right here. They're saying 7.18. Interesting to know, buyers, bottom left, buyers will drop agents who aren't showing their value. just because we've known a client for an extended period of time, felt like they're our client, please know that that can change if we're not steadily bringing value. The ICE Black Knight piece has to do with lenders, and that agreement together is about $11 billion. Finally, on the bottom right, there was a pocket listing thing that happened a few years ago in 2021, and that's being brought back up into an appellate court and to see if it's still valid. Lots happening with NAR, of course. There was a change at the president level of NAR, and the 2024 NAR president, who normally would be sworn in the November meeting in Anaheim, has already been pulled forward and placed as the NAR president moving forward. NAR is really focused on the class action lawsuits that are coming at him. The first one is slated to go to trial in October. For the first time ever, I've heard more talk about a settlement than ever. So we'll keep a very close update on what's happening at NAR, especially with the case lawsuits moving forward. Next, please. Quickly from HUD, that fire that hit Maui was devastating, and HUD is going to travel out there and look to see how they can best serve the hurricane in Florida. I'm sure there's some areas that are just devastated, and we have to be fortunate. Remind ourselves we're fortunate in the market we play in here in Arizona, that we really don't have the floods and the earthquakes and things that can happen in parts of our U.S. It does get hot, and it's been hot for a long time, but it's a market that I love to be a part of, and I love living here. Next, Sarah. Ladies and gentlemen, 3 or 4 key slides I wanted to share from Lawrence Yun, who published these mid-August at a conference. And what he's saying in this opening slide that I felt was important to share with everybody is our home sales are essentially the equivalent of where we were pre-COVID. We're down about 23% year to date, and this graph is illustrating that. And again, there's a lot of moving parts. We'll talk about that here in a second. But again, holding pattern, and I just wanted everybody to have a peaceful understanding of what's happening. It may not be their models and systems or their clients just not engaging. There is a holding pattern happening out there. Next, please. This graph here is illustrating inflation. We're down to 3%, but not 2%, and that's where ideally the government would like us to be, but we're definitely trending down since our peak March of 2022, July of 2022. We're in that 3% range, trying to get to 2%. Next, please. This graph here, I included, sometimes people worry about distressed properties. Ladies and gentlemen, we have gone from 1% to 2% of distressed properties, up a full percent. And what Lawrence is saying here, it's still non-existent in the grand scheme of things. Next, please. I wanted to bring some good news to the group here today. Just if you were fortunate to be a homeowner prior to 2020, to the Q2 of 2023, Arizona's ranked one of the highest, north of 50%, 51.9% appreciation of home values that could not sustain forever. But we've been very fortunate in our market to ascend nicely. Next, please. Now to bring sense of everything that we just talked about together. I know I've shared this slide with the group several months now, but it really, I want to reiterate it one more time. The 4 influences of our housing market are: 1, the economy; 2, technology; the government; and societal shifts. And ladies and gentlemen, each one of those is running between an 8 and a 10. Some would attest that they're all a 10. And so that is pushing down on our market, having influence, some positive, some negative, some locally, some nationally. Again, the economy and inflation is right now the biggest push. There's an election coming up this time next year. Societal shifts, again, fire, earthquake, hurricane is out there happening. Multi-generation family is still happening. We do have some great workforce things that are attracting companies and growth from that standpoint. And then please know, technology, ladies and gentlemen, there are billions and billions of dollars being invested in real estate technology as we speak. There's this phrase, the big are getting bigger. Next, please. And then again, I tried to make this, what mode are you in, or what mode is your buyer or seller in? And I just raised the font around even keel or holding pattern. That is all those influences are causing a little bit of a pause or a pause compared to what the true demand for our housing market is. Next, please. As we start to get into some of the numbers, total actives in all of ARMLS went over 12,000. Actives in Maricopa County are up a little bit. Ladies and gentlemen, not a huge increase. We have this second half of the year race, more of a marathon that runs mid-August through usually into the Thanksgiving holiday. We're used to seeing more activity, etc. So we do have a few more active listings, etc. What I want to point out for this graph this month is under pending, far right-hand side, our pendings are actually down from where they were a month ago, and our under contracts accepting backup dipped below 2,000. Ladies and gentlemen, that's going to show up this time next month in closings. And we did get to total solds at 6467 and total solds in Maricopa County just north of 5,000. I don't know if that's going to be able to hold this time next month with the trending set down in pending and under contract. We'll have to wait and see. Sarah, next, please. I like this slide, ladies and gentlemen. Forgive me for trying to be silly, but we dipped down when the market was truly euphoric and everything was flying off the shelf to technically sub 4,000 active listings. When you look at the 153 zip codes in the MLS marketplace, that worked out to 25 active or 26 listings per zip code. That is single family, townhome, condo, manufactured home, everything. When we were at almost our lowest point, it would average 26 properties per zip code. Right now, we came up just a little bit at 8517 total listings. Works out to about 55 doors per zip code on average. Next, please. As we start to understand some of the numbers, looking at this is just a quick snapshot of active, pending, and sold. Our actives in Maricopa County, 8375. I like to point out the sold to listing ratio has kind of started to level off, ladies and gentlemen. It is almost at 100%. It's running 98, 99%. And if you look at the bottom right graph of the bars, average and median sale price, that looks like the last 4 months are literally a leveling. Hasn't gone up dramatically, hasn't gone down dramatically. Right now, we're up about $1.40 per square foot overall in all of Maricopa County. Next slide. Want to put it in perspective, ladies and gentlemen. A balanced market, some will say, is between 4 and 6 months. When I first got into real estate, they said a balanced market is 6 months. We haven't seen anything like that for many years. We're currently at 1.76 months of supply with an absorption rate of 56.95 at the day of this report. That's still a very brisk market, moving fast. If you have a home that's priced at market and it's in good condition, look for multiple offers. If you have a home that needs $10,000, $20,000 worth of deferred maintenance and you price it 3 to 7 to 10% over market, chances are you're not going to have as much fun as a seller and a listing agent to get that over the finish line. Next, please. Perspective on all of Maricopa County. This is Maricopa and Pinal County aggregated together. Our active listings are down 40%. That's in blue. In yellow, our median sale price is down 4.9% on the average. Both counties combined together at 255.09. Next slide. We break that out at what's happening in Maricopa County versus Pinal. Maricopa County is only down 3.5 from this time a year ago. Now, ladies and gentlemen, it was March a year ago when we first started seeing the increase by the Fed to help drive off inflation. That happened in March of last year. We just had another interest rate hike Friday a week ago. And it looks like that impact on mortgage again is in the 7s. I've certainly seen some 8s come across the desk. Maricopa County is Pinell County, I'm sorry, is right now priced about $63 less per square foot on average, and they are only down 5.6% versus Maricopa County in yellow is only down 3.5% from where it was a year ago this time. Next, please. Okay, some numbers behind the events. So the green arrow, first one, under contract, we were, for all Maricopa County, we're at 5,800 under contract doors, and that's technically up 2.65% from where it was a month ago. Now, new listings, second row in blue, 74. Ladies and gentlemen, just the fact that there's a couple hundred more doors, new listings, than there were, I'm sorry, a couple hundred more doors, new listings than there were under contract. That's just going to tell us we're going to stack a little bit, not a lot, but a little bit of more inventory every month, and we could sure benefit from that. What I'd like to share with you, the whole group here right now, is this, that 84% of our transactions in Maricopa County are just a normal sale. 7.68 are new builds, and flips are 6.8. Ladies and gentlemen, in the grand scheme of things, that's a pretty even keel market. But as we drill into a little bit later, we're going to look at 5-6 cities and look at how new builds are influencing the market. This is what's happening all aggregate of Maricopa County. Next slide, please. Active listings have taken just a slight uptick by about 500 doors from where this was taken in July 1st versus August 1st versus going into September. So the trend is up slightly from the bottoming out, let's just call it June, July of this year. Next slide. Under contract, again, compared to where we were 30 days ago, we were at, when we opened up September 1st versus August 1st, we're at 5,800 doors. Next slide, please. Closed was down on the far right-hand side of this graph, 4,400 doors. This is for all of Maricopa County. Holding pattern repeats itself. Next slide. New listings. This is that second half of the year marathon cross-country run, Sarah. We did have an uptick in new listings coming to market. And what everybody needs to understand is this. Even though we had less than 5,000 closings in the last 30 days between temporary off market, canceled, and expired listings, that equals about 50% of the close, meaning we had about 2,500 doors that went temporary off market, canceled, or expired. If the average is a 6-month listing, just to try to look at trends, and they came off, canceled, or expired, they probably were pricing a little bit under expectation, over expectation, and they just didn't get the house sold. They didn't find the next house to move into. What I want to point out to the group, all the listing agents out there especially, is the new listings that have come in, 7,310. Ladies and gentlemen, they're coming in with an understanding of the market of the moment. There's a reason they need to list. There's a reason they want to either transition out of Metro Phoenix or get across town, downsize, or upsize. They are more understanding. They've been playing in the market longer than those people who just expired or just canceled from 6 months ago. I want to give that perspective and mindset with everybody. Next, please. Here we go into just a little bit more granular detail about the new listings. The new listings are up just a couple dollars average per square foot in the bottom left of this graph, from 303 up to 305, and from median sale price per square foot 275 to 276. Ladies and gentlemen, when you look at the black and the red line just going across, you see the gap there. There is a $30 per square foot, maybe even higher delta on the new listing average and the new listing median sale price. Next, please. Current listings. One is set up the gap. Now, new listings on average have gone from 332 down to 329. You see the black line trending down a little bit. And the median sale price 281 to 280, it's down $1.70. But that gap, ladies and gentlemen, that gap, $50 a square foot, not $30 a square foot. And that's a differentiate factor right there. Next, please. Under contract has gone up from 303 to 307 for the average, and 267 to 269. Again, there's a gap of about $42 in the average and median sale prices, but that is trending up and has been, since January of this year. Next, please. Solds a little bit tighter. So our solds went from 282 to 283 on the average, and median 265 to 266. Just a $1 increase, not dramatic. The gap between those is about $25. But that trend line is very consistent. The green bar is showing the number of sold listings in a vertical, knowing that we peaked in May at 6,000, and we've been running just over 4,000 the last couple months. Next, please. Here we go with average sold to list price. Ladies and gentlemen, when the interest rates were really having an impact on our marketplace, that was in the November, December, January market time. Our listing agents have gotten better and more in tune to the market. Our sellers have got a better understanding of the market. And so those two, average to sold to list price and average sold to original price, have started to come back and converge much closer. They're both running 96 to 98%. Couple more things I just want to comment on for the group out there. Prior to interest rate changes, we had almost forgot about seller contribution, seller concessions in a transaction. When interest rates started to go up, those that had some history quickly negotiated a seller contribution to help buy down the interest rate. That quickly caught on, and we got into the high 50s, almost low 60% of transactions where the seller was contributing something back to the buyer, and normally it was to help offset and buy down the interest rate. That has pulled back to the high 30s, mid 30s%, not what it was even 3 months ago. But with this latest increase in interest rates by the Fed, and we're now mid sevens, low sevens, don't think that that's completely off the table. People are getting more and more creative on how they can help the buyers buy. Cash has certainly gone from 20 up into the 30 to almost 40% of all the transactions that people are just moving their own finances around to pay cash for a home. Lot of creativity is the point, and how can we help the buyer win, and how can we help the seller win? Next, please. I wanted to bring this supply and demand graph in. If you look across the top, 2023 August, go towards the far right, look at month of supply for me. Know that in January, we were at 3.4 months. We got as low as 1.3 months in May, and we've been trending up month of supply, just not a full point, but a quarter of a point the last couple months in a row. Next, please. Here we go with Apache Junction. And as we work to close out, I'm going to ask Sarah, who always does a great job for all of you, and Landmark in general doing a great job, that let's pause, if you would, please, at Avondale. Let's stop here and let's look and see what's happening at Avondale with the next two slides. We'll go slow here. So our actives are down 39, almost 40% from where they were a year ago. The median sell price in Avondale is down 6.2% from a year ago, ladies and gentlemen, at 227.22. If we go to the next slide, Sarah, I wanted to point out this, the circle graph. All of Maricopa County is running around 7 to 8% new build homes. Avondale on the west side is running 15.49%. new build construction. And then there's a bonus 2.8% fix and flip. It's pushing it at about 18% of the homes are going to look and feel like a new build. Now, if you look in the blue numeric piece, look at under contract at 86, and look at the fact that new listings are at 104. That's up 8%, 30%, 36% in the last 3 months, and 31% in the last 6 months. Ladies and gentlemen, there's construction happening in Avondale, Buckeye, which will be our next city. But what I want to point out to you was with that new construction, a lot of times comes the builder's preferred lender. And when interest rates are so high, they have a lot of opportunity to be creative and find the win for your buyer. So one, what I want to point out to everybody listening today is that in areas where there's new builds, that lender could be creative in a very positive way. Second thing is if you're listing a resale home in that area, please know that there are going to be buyers looking at new builds. And so if you're getting ready to list a home, having it look pretty move-in ready just helps speed to market and speed to sell and have an opportunity for the most offers coming in within the first 30 days or less. Next, Sarah, I'd like for you to stop at Buckeye right here. Here we go. Buckeye is down only 4.8% in its median sell price, and the listings are down just shy of 50, 47.9. If we go to the next slide, Sarah, we're going to look also here. Buckeye, 26% in that circle, 26.94% are new builds there, and 4.57% are fix and flips. We're essentially at 30% of the transactions feeling like a new transaction. Now, when you look at this city, when you look at under contract at 294 and new listings, the second line in blue, 246, ladies and gentlemen, that burn rate is happening faster than new listings are coming onto the market. And that's going to cause an increase in price if it keeps up this rate. Our absorption rate in this city is north of 55, 60%, but the under contract and new listing is under contracts far greater than new listings coming on the market. There's a delta there. Next, Sarah, we're going to slow down and stop in Gold Canyon. And in Gold Canyon, market is moving pretty darn quick. And here we go. So our median home price there is down 14.7% in the yellow, but our active listings are not down 30, 40%. Our active listings are only down 4% from where they were a year ago. Basically 100, and today they're 96. So that market is ready and running at a pretty consistent rate. When we go to the next slide, Sarah, what's happening behind the scenes, I wanted to point out once again, a lot of new construction happening there at 33%, even higher than Buckeye and Avondale. When you look at new or under contract at 29, these are not huge numbers as a total number, but as a percent, they're significant. And please know too that new listings are coming on faster than they are going under contract, but new builds with that preferred lender, chances are, is happening, and there's just creativity there. Next, Sarah, I'm going to have you slow down in the city of Laveen. Laveen, right here we go. Active listings are down 43%. Price per square foot in yellow, or median sale price per square foot in yellow, is down 9%. If we go to the next slide, Sarah. Again, wanted to point out that in the orange circle, 23% of that market is new build. And there too, under contract at 106, new listings only coming on at 80. If you look hard, the under contract at 106 doors, and there's only 88 active listings. If this continues, they're going to have absorption rate north of 100%. And again, it's going to impact price, and new builds are doing well there as a percent of the total. I have two more cities I'm going to have you slow down for, Sarah. And the next one is going to be the town of Maricopa, right here. Thank you. Perfect timing. In yellow, we're down 5.6% median sale price, and active listings in blue are down 35%. they're running about $195 median sell price per square foot. We go to the next slide, Sarah. The town of Maricopa, again, it's alive and well with new builds and flip combined, equaling about 44%. Again, under contract at 259 in the blue number, versus new listing at 218. We're selling them, putting them under contract faster than the new listings are coming on. And that market is moving quickly. The last one I'm going to have you stop at, Sarah, and it's been great visiting with you today. And thank you for always doing such a good job for us. Landmark Title consistently performs at a very high level, and they're out there ready to serve you. We're going to stop at Tollefson. And there's just a lot of things happening to the west, especially with construction. So our active listings are down 50% in blue, and our median sale price is down 5.3%, with a median sale price of $210 per square foot. There's a phrase, sometimes you drive until you can buy, but there's just a lot of energy happening on the west side with Douglas Ranch, etc. There's going to be thousands and thousands and thousands of doors being developed out there. And that's reflective, next slide, Sarah, with new home construction, again, 37% plus flip at 6.98. That's running about 43% of all the doors sold in Tollefson are essentially new construction, under contract at 129 when there's only 65 actives, and new listings at only 65. Again, prices are going to surge there if the math stays the same. Look for that to be happening. Ladies and gentlemen, in the market of the moment, holding pattern, even keel, peaceful, being creative, paramount in this market. Find the motivated, number one. Number two, and I'll use Sarah's words, it's time to be highly relational in every aspect of your business, with your business partners, your lenders, your title, your inspectors, everybody. People want an agent that can perform for them. It's been a pleasure spending time with you. I hope September finishes strong, and have a good day out there.
Thank you for watching. Join us every month on Market Insights to be the realtor in the know.